Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can get access to this risk metric. However, there are plenty of other metrics that you can use other than this one. This is just the one that I use, but I'm not trying to suggest that it is the best one. It's just the one that I've been accustomed to using essentially since 2019. So the risk metric varies between 0 to 1. So 0 is historically low risk, 1 historically high risk. And the idea is that we just look at historical price movements of Bitcoin and volatility of it and assume that we will stay within those bounds, with the assumption, of course, of sort of diminishing returns, right? So we've seen from one cycle to another, we've seen the risk metric go from really low risk levels to really high risk levels. And one thing I like about this risk metric is that I created it in 2019, and despite the fact that it's been around so long, it hasn't broken. Now, that doesn't mean that it can't break, but so far, we have never gone outside of the bounds that this risk metric suggested were theoretically possible at any given time. Even during the crash in March of 2020, we bottomed out at 0.13 risk. And in February, March timeframe of 2021, we went to the 0.9 to 1 risk band. So during the depths of the pandemic crash and during the heights of the rally in early 2021, despite the fact that you could have made a case for going lower or higher, we did not exceed the bounds of the risk metric. So back in early 2021, when a lot of people were calling for 300K, and I was very much in the diminishing returns camp, you can see that, again, the risk metric said back then that we were way too heated and we needed to cool off. Just like in March of 2020, the risk metric said, look, this is irrational and we're probably going to start going back up. And in late 2022, we were at low risk levels and we started going back up after that, right? So my strategy, which again, I mean, it's not perfect and it has changed over time. I used to buy Bitcoin up to 0.5 risk back over here in this cycle. But this cycle, the current cycle, I chose to be a little bit more risk averse and only buy up to 0.4 risk. And that's just, I think, as we go from one cycle to another, it's natural for people in general to become more risk averse. And so because of that, I decided, hey, I'm still fine buying Bitcoin, but I'm only going to buy it up to 0.4 risk, right? So in ITC Premium, I listed my limit orders, right, according to the risk bands, a lot of them between 0.1 to 0.2 risk. In fact, the buys between 0.1 to 0.2 risk got filled multiple times because we sort of filled them, and then, we went up, and then we came back down and it filled them again. But we have been above 0.4 risk for a while now, right? In fact, if you look at when we left the 0.4 risk band, let me actually highlight all of them here. You can see that we've been above 0.4 risk essentially ever since March of 2023. So I think the idea behind all this is that it can be challenging because, if you do buy at low risk levels, usually there's no one around to care. And then whenever the market inevitably goes up and you decide, hey, I don't want to keep on taking on more risk by buying more, then, new people come in, they buy, and then they laugh if you're not actively buying. But again, those people weren't necessarily here during prior periods, and so it's natural for them to say, well, why aren't you buying at the price going up? The reality is that when Bitcoin goes into these manic periods, risk and price can go up very quickly for long periods of time. But what history shows is that whenever you get into the 0.7 to 1 risk bands, which are shown on the chart, sometime in the not so distant future, you will likely find yourself back between 0.3 to 0.4 risk. And I just want to go through each example. So in 2011, we went all the way up to some high risk bands. And then a few months later, we found ourselves back below 0.4 risk. Here in 2013, a couple times, not long after going to the 0.7 to 1 risk band, we found ourselves back below 0.4 risk. Same thing in 2017. Same thing in 2021, right? And so once again, we find ourselves in the zero point 0.7 to zero point 0.8 risk band. History shows that usually within a few months, you're likely going to go back down to less than 0.4 risk. The hard part is how high do we go before that happens? Because while we are at 0.7 to zero point 0.8 risk, there is still the 0.8 to 0.9 risk band, and there's also the 0.9 to 1 risk band. Now, it would be a mistake to assume that we have to go to any specific risk level. For instance, during high interest rate QT environment of 2019, Bitcoin topped out at 0.6 risk. So you cannot assume that every rally has to top at the 0.9 to 1 risk band. In fact, in 2011, we didn't make it to the 0.9 to 1 risk band. But we made it there in 2013, 2017, and early 2021. In 2011, we made it to the 0.8 to 0.9 risk band. So you can see how assuming you have to go to a risk band can be devastating if you don't make it there. Imagine your strategy would be to say, hey, I'm going to sell everything when Bitcoin hits 0.975 risk, but then imagine it tops out at 0.97 risk. You made a lot of money, and then you just watched it all quietly go back down, because inevitably when you reach the higher risk bands, what usually happens is we go back the other way. And so what I've learned through the years is to not say specifically where price or risk are going to top out, but to have a plan to navigate that no matter what happens, right? So the idea is if price were to go to that risk band, it might mean selling a certain amount, but not everything. I call it, what I do, dynamic dollar cost average. Now, everyone is aware of DCAing into the market, but there's also the idea of DCAing out of the market. What I generally do, at least what I'm doing this cycle, is below 0.4 risk, I like to get into the market. Between 0.4 to 0.6, I don't do anything except make dubious speculation videos where I talk about what might happen, but I'm not really buying or selling. Above 0.6 risk, then I start thinking, hey, we are in a manic period. It is true that price can continue to go up, but at some point, likely later this year, we should see it cool off like we normally do. Normally, after hitting high risk bands, you can see just how quickly it comes back down. So right now, we are at 0.734 risk. We have already taken out the risk levels that we topped out in 2019, but we're still below the risk levels that we topped out at in 2011, 2013, 2017, and early 2021. So there's different strategies, right? There's a lot of different strategies. And in fact, there's this DCA strategies. Well, this is sort of getting in, but there's there are exit strategy tools that you can look at. And, it could be conservative or moderate, aggressive, the hodler, YOLO, or Sea of Tranquility. The Sea of Tranquility person is the person that just knows where the top is and they sell everything at one risk, right? So the idea is you put in, say, a projected peak. Let's say you think the peak is a random, I don't know, just any random number. Let's just say 100K, right? And then you can look at this and sort of figure out if you were following a constant selling strategy, a linear or an exponential, whether you want to sell at the beginning of the risk band, the middle, or the top, what that would ultimately correspond to. Now, the reason it's hard is because usually what happens is you get into a risk band, someone sells some, and then the price goes up, and then what happens is they then panic buy back in. And then it tops, and then it goes down. So that usually doesn't work, right? What I have found that works is as you get into wristbands that you become a little bit uncomfortable with, right? You're like, all right, I like Bitcoin, but it can't do this forever. One thing you could do, not financial advice, is to sell a small amount so that you're kind of like dipping your toe in the water to say, look, I sold a small amount, and if there's a pullback, I can be sort of happy about that because I sold some. But if there's not a pullback and you continue going up, you would still want the majority of your Bitcoin, right? So for instance, it could mean in the first time you sell, it's only 1/10 of your Bitcoin. The second time, it's like 2/10. The third time, 3/10. The fourth time, the rest of it, assuming, but also potentially also having a hodl stack that you just hold on to no matter what. Now, of course, these sorts of views are not liked by sort of the diamond hands crowd that says that you only ever hold your Bitcoin. And I honestly can respect that view as well. History shows that Bitcoin does generally trend up with time. But for those that like sometimes taking profits and sort of redistributing that capital elsewhere until you get back to calmer days, I think these strategies can work out relatively well. So, for instance, even going into the spot ETF launch, the risk level went into the wristband that I was comfortable finally saying, all right, I might take a little bit off the table here. However, after saying that, and then price topped out at 48K, we then went all the way back down to 39K. When we went to 39K, I said, look, guys, while risk is elevated, we've also seen all these prior rallies top out or bottom out, or sorry, these pullbacks bottom out after about 20% drops. And so once we went back to 39K, I said, multiple times, that could be all we get, right? And, before another rally going into the halving, because this has been very much a narrative-driven thing where it just seems like we're just chasing whatever the next narrative is, whether it's the spot ETF or the halving or, maybe the ETH ETF or the merge by ETH. It just seems like we're chasing one thing after another. And so, that's just sort of one take on it is, look, we went up to a high risk level, and then after that 0.6 to 0.7 wristband that was hit, we actually dropped back down, right? After getting there, we actually dropped back down a little bit into some lower risk levels. And so I just want to sort of continue to highlight that, look, when you go into high wristbands, it can go on for weeks, if not months. Historically, sometime not too long after that, you find yourself once again at a lower risk level. But good luck convincing anyone of that during any of these prior peaks, right? Good luck convincing anyone of that. When I tried convincing people that in April of 2021, because when we were, we had already hit 0.9 to 1 risk, and I said, look, we're likely going to have a summer lull, people didn't like that, right? It was 300K, right? There was 300K or you're the enemy type thing. And then we ultimately went back down to below 0.4 risk. And now we've only just started to hit the 0.7 to 0.8 wristband. And so it sort of raises the question, well, how long can we stay there? How long can we stay there? If you look at 2019, when we hit 0.6 to 0.7, we stayed there for a few weeks off and on, right? And we printed, maybe eight dots here in the 0.6 to 0.7 wristband, but we also spent a lot more time in those levels as well, at maybe some lower risk levels, just sort of chopping around. So that time we weren't there for very long, but like in 2020, late 2020 and early 2021 and 2017, and even some in 2013, we were there for weeks, if not months. One thing to look at is to maybe go look at the amount of time we spend in the wristbands, right? If you look at the time we spent in wristbands, out of all of Bitcoin's price history, we've only been in the 0.7 to 0.8 wristband for 131 days. Between 0.8 to 0.9, only 80 days, and between 0.9 to 1, only 18 days. So history shows, if you go look at it as a percentage, that's 2.65%, 1.62, and then 0.36. So if you just add these up, if you add up 2.6 to 1.6, that's going to get you to about 4.2 or so. And then if you add in another point, you're looking at it maybe 4.5% of the time you're at the 0.7 wristband or higher, right? Only about, let's just say 5% of the time we are at periods where the market is this manic. Only about 5% of the time. That doesn't mean it can't go up, right? It doesn't mean that, but it means having a strategy in place is likely a good thing. And so rather than, look, there's always 1,000 things to worry about, right? At any given point. And I talk about a lot of things, right? It's a YouTube channel. I'm not just going to talk about the risk metric every single day, right? But whether you want to talk about the contagion in 2022 or the yield curve that's going to have some implications at some point, whatever it might be, there's always something to think about. I don't trade any of that stuff, right? I just look at the risk level and say, look, if we drop to below 0.4 risk, then I would be a buyer. If we go up to much higher risk levels, and as we, venture into that, then I probably would want to sell into it some. It's not, anti-Bitcoin to sell into parabolic rallies. And it's, it's okay, I think, to buy when you go to low risk levels. It's just that it's investing, and the market tends to not just go to say what a fair value is. It tends to get to extreme fear, to extreme greed, and back and forth. And whenever we go up, we feel like we can never go down. And whenever we go down, it feels like we can never go back up. So what I would say is, rather than trying to predict what happens, just say, if this, then that, right? Like if it hits my risk level that I'm interested in selling at, then I might start to offload some. If it doesn't, then I have to be okay with that. And if it goes down, then I might start to buy some. Typically, it's a good idea, in my opinion, to have sort of a gray region where you're neither buying nor selling, and just sort of letting it sit for a while, so that you're not just like buying below 0.5 risk or something and selling when it goes right above it and then sort of flip-flopping on a daily basis. I think it makes sense to have some sort of a gray region. When you look at a chart like this, I mean, it really is telling. And so it sort of raises the question, well, we're already in the 0.7 to 0.8 risk band now. How high could it theoretically go? And what does 0.4 risk correspond to? Because in all these prior cases, a few months later, we often found ourselves, back in the, back going to some of these lower risk levels, right? So it is a relevant question to ask. Well, if you go look at sort of the dashboard over here with Bitcoin, and we look at the current risk, right? We're at 0.73 risk at 72.6K. Now, remember, these are dynamic. So if you're watching this video in 6 months, these are going to be different, right? And so you'd have to look at a more recent video. But all I can say is this is what they are today, right? So the highest risk today, so one risk corresponds to almost 121K. 0.8 risk, so the 0.8 to 0.9 risk band is up, I guess I should say 0.7 to 0.8 corresponds to 67K up to 83K. 0.8 to 0.9 is 83K to 101K. And then 0.9 to 1 is 101K to 121K, right? I have learned many, many times that if it's on here, it's possible. What's 0.4 risk? 31K. The reason why 31K is interesting is because that number should mean something to you at 0.4 risk. Why is that? Well, 31K, coincidentally, is this high, right? It's the summer 2023 high. So what if in sometime in the next 6 months, we find ourselves back at that level? Have a plan, right? Have a plan. It's foolish, in my opinion, to be the person that sort of comes in and buys the top of like the 0.8 to 1 wristband or something, only then to sell in a capitulation back to a prior support level, right? So if it plays out like that and you go back to 0.4 risk, just keep in mind that number, right? Which again, it will change. Now, 0 risk is all the way at 12K, which is kind of funny, right? I mean, if you think about 12K, that's been a number that a lot of people have talked about as a potential price target back in 2022. My only thing that I will say is that, look, when you're in parabolic rallies, it's uncool to call the top because most people are wrong. When you're in bear markets or capitulations, it's difficult to call the bottom because most people are wrong. That's the reality. And the closest I've even gotten to trying to sort of potentially time the top, which again, I'm not even going to, stick to, I'm going to just stick to the risk level, is to say, I think that there is a risk of Bitcoin USD finding a local top when all Bitcoin pairs break down, right? And the reason I say that is because last cycle, when all Bitcoin pairs broke down, that's what marked the top of the 2019 QT rally, right? That's precisely what marked the top, was when all Bitcoin pairs broke down right there, sort of in the summer. And so that is something I continue to look at. But the hard part about that is, like, who knows when they break down or if they will. I think they will for reasons I've stated in many prior videos. But that's sort of the my attempt at potentially trying to call a local top, is to say, look, if and when all Bitcoin pairs break down, I think that could correspond to a local top. Not because, there's no other money coming in from other places like spot ETFs or just people that are DCing into the market that want to DC into higher risk levels than me, but just to say, look, the purchasing power of altcoins when all Bitcoin pairs break down diminishes a lot. And if that's the case, then you might see a larger pullback by Bitcoin. So I don't know what price that corresponds to is the problem, right? If I am right about that view, which I very well could be wrong, but if I am right, I don't know if that corresponds to Bitcoin at 73K or 75K or 80K or 90K. Like, I don't know how high Bitcoin has to go in order for all Bitcoin pairs to break down. My strategy for the last 2 years or so has just been to say Bitcoin heavy crypto portfolio until Bitcoin dominance gets much higher. I've talked about 56% as being an area of interest, right? So when we get to 56% dominance, assuming that we do, I think we should take a look at the market in detail, just like in 2019, and say, look, is it going to play out the same way or is it going to be different? In some ways, it already is different considering we put in new highs this time, and in 2019 we did not. And I've said previously, I think this is a combination of the 2019 QT high rate rally and the other rallies where we had new highs that happened during QE. So I will continue to stick with that idea and continue to say that I do think there is a potential risk-off dynamic when alt Bitcoin pairs break down. I've been saying that for a long time, but the reality is that they just haven't broken down yet, right? So anytime I see altcoins pump, I just think, all right, well, because of where we are within the business cycle, the implication of that altcoin pump is that the liquidity from that altcoin will eventually make its way back over to Bitcoin and be fuel for Bitcoin to continue to traverse the risk levels. So when you think about how high can Bitcoin possibly go, no one absolutely knows. Like, no one knows. I can't tell you. I have no idea where it's going to top out. What I would say is we are getting into some fairly manic times, right? And history shows that those times can last for weeks, if not months. And we've already been in this phase for at least a few days, right? At least a few days. And it can last for a while. But the point is at some point later this year, the market will likely cool off. And I think it makes sense to just have a plan, set a plan in motion so that you can follow it no matter what, right? You know, anytime, what often I see happen is people come up with a plan, and then when we get into the parabolic mania, then they get into this time is different. And of course, it's no different this time. Now it's spot ETF and BlackRock and all that stuff. And the idea is that they'll never let the price of Bitcoin go down. But guys, there was the same, not the same, but similar narratives back in 2021 of all the institutions and stuff pouring in, similar narratives in 2017 and even before that. You know, there's always been a narrative to say why this time is different and why the risk metric will be broken. But every single time it ends up being a pretty good indicator. And the great thing about it is it has nothing to do with my opinion. It has nothing to do with my opinion about the macro or if the Fed pushes us into a recession. It has nothing to do with the unemployment rate. It has nothing to do with altcoins. The only thing that the risk metric cares about is prior volatility of Bitcoin. That's all it cares about. So it assumes that everything else is baked in. That doesn't mean it has to go to the highest risk level in every rally. In 2011, it only made it to 0.8 to 0.9 risk. In 2019, it only made it to 0.6 to 0.7. Right now, we're at 0.7 to 0.8. But what it does mean is that the market is getting somewhat manic. And while it can last for a while, and we could go to higher prices than a lot of people think, at some point, we'll probably see ourselves back below 0.4 risk, even though for some reason it seems like it's impossible. And I think the reason it can often seem like that is when you're in these parabolic rallies, it's hard to imagine anything different, right? It's hard to imagine anything different. But the reality is that only a week ago, Bitcoin was at 63K. And a week before that, it was at 52K. And just a few weeks before that, it was at 39K. I mean, legitimately a month and a half ago, the price of Bitcoin was $39,000. It's almost doubled since then. It's almost doubled. So this is the reason, right? This is the reason that it's hard for people to imagine it going down, is because it just goes up so quickly. And so, you know, whenever the turn comes, whenever all Bitcoin pairs break down or whatever risk level we have to go to, I just want to make sure that people have a plan. They have a plan going into it. You don't have to use my risk model. I mean, there's plenty of other models that you can use. There's just the one I use. So when you hear me talking about the risk metric, this is what I'm referring to, right? This is what I'm referring to. When I say I'm buying up to 0.4 risk, I'm referring to this model here. When I say I start to scale out, you know, over 0.6 risk, this is the model that I'm referring to. And you can see like why scaling out slowly above that level can be worthwhile, but you can also see why if you sold everything at 0.6 to 0.7 risk, how with the exception of 2019, that would have been a very foolish thing to do because the price continued to rally on up. So the issue is that let's say you get to 0.6 to 0.7 risk and then you sell everything and then we go up another 2x, then you might run the risk of YOLOing in at the top only to then watch the market dump back to where you previously sold. If you scale out slowly, then you have some incentive to want to see it drop down, but you're also incentivized to see it go up because you only sold a small amount. It's the same thing like if you see the price dropping and you see the risk level dropping, you know, let's say you buy some at 0.4 risk, you know, you probably don't necessarily want to go all in at 0.4 risk because what happens if it goes to 0.3 risk or 0.2 risk, right? So it makes sense in my view, not financial advice, to have a strategy based on something that is not using emotions, right? It's just to say, look, based on historical volatility, this is what could happen. It has nothing to do with the opinion of every YouTuber out there, including me. It's just this is what could happen based on historical volatility. And I've learned over time, many, many times, to just respect that, right? To respect that if it's part of the risk metric, then it's possible. As crazy as it might sound, to the upside and the downside. So that's what I use. Remember, when you're in these high risk bands, historically we're only in it for about 5% of the time. That can still be a few weeks or months because Bitcoin's been around for over a decade, right? But it does just go to show. It's just a humble reminder that manic parabolic rallies don't last forever. They can last for a while, but they don't last forever, unfortunately, right? It'd be nice if the market just went parabolic forever and never went back down, right? But that's just unfortunately not the way the market tends to work. And so recognizing that and saying, all right, if that's not the way the market works, how does it work? Oh, we tend to go into parabolic manic rallies to high risk levels. And then after that, we tend to fade back to some lower risk levels while we sort of gather ourselves and look to see what the next thing's going to be. So that's the way that I navigate crypto. You can get access to this risk metric on ITC Premium. We do have the sale still going on, so check that out. Links in the description below or the pinned comment. We also have risk metrics for other cryptocurrencies as well, not just Bitcoin. I just mainly focus on Bitcoin because it is, it's obviously the safest cryptocurrency in my opinion out of all of them. And also I focus mostly on Bitcoin for the last 2 years because I view it as the safest asset, but also because I think we are in a Bitcoin dominance rally. So not only is it the safest asset in my opinion, it's also giving pretty good returns. Not necessarily beating every altcoin, but it's beating most of them. And I know a lot of people don't like to hear that, but if you look at a cryptocurrency heat map of the top 200 coins over the last year, these are their Bitcoin pairs. Bitcoin has outperformed a majority of them. I counted these up the other day, and it turned out only 19.5% of these alts in the top 200 had outperformed Bitcoin over the last year. So it's easy at any given day to cherry pick an altcoin and say, well, look, this altcoin is outperforming Bitcoin. But the general trend has been Bitcoin has continued to gain market share. And so because of that, I focus mostly on Bitcoin because not only is Bitcoin dominance going up, but Bitcoin is also the safest asset in the cryptoverse. So to maximize your risk-adjusted returns, I thought having a Bitcoin-heavy crypto portfolio would be the way to go. And so, to reiterate, the closest I will get, to really trying to time anything is just saying, look, if altcoins break down on their Bitcoin pairs like 2019, I think that could mark a risk-off signal. Hasn't happened yet. And then to say, I know that, to look at the current risk levels and to say, and to see it at 0.7 to 0.8 risk, right? Like I know it could theoretically go higher than that because history shows that it can. History also shows like 2019 where it doesn't have to, right? So again, for me, it just means, scaling out a little bit at some low higher risk levels, right? So above 0.6 risk, scaling out a little, and then scaling out more the higher you go with the idea that you eventually will see lower risk levels. At the end of the day, there's no guarantee, right? At the end of the day, there's absolutely no guarantee in the market. And the narratives are very strong at tops, and if we were to go to 0.8 risk or 0.9 risk or something like that, I have to imagine the narrative would be that with the SPY ETFs, this time will be different and that there will not, that we won't see it play out in the same way. My guess is that whenever the manic phase is over, we will see some calmer times where then we'd speculate on what will be sort of the next catalyst for the next run to really high risk levels. So I just wanted to show the risk metric that I use. I would encourage people to find something to use rather than to just panic sell bottoms and panic buy tops. Might be worthwhile to figure out something to use to navigate the market. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We'll see you guys next time. Bye.